This chart right here shows you why you should think twice about jumping into ARK ETFs. I mean, just look how many lines are on it. Makes it seem more legit, right? All this and more in today's video. All right, everybody, settle down. Class is in session. I'm Steve Antonioni, and if we haven't met before, I taught myself how to quit my boring old corporate job through the power of personal finance, and now I make YouTube videos to share my thoughts and experiences of how you can accomplish incredible things in your life as well. So today, I wanted to take some time to talk about ARK, and specifically the ETFs that you can invest in through ARK. And I assume if you clicked on this video, then you must be at least already somewhat familiar with them. And if you're not, then you are in for a treat, because ARK is one of the most interesting stories in investing right now. But before we jump into the video, I want to quickly mention that the free stock promotion through Webull appears to still be running. So basically the way it works is you just deposit $100 with them and you can get 4 free stocks that are worth up to $1,600. I mean, it's easy, free money. So take a look at that in the description down below. So yes, you may have noticed that in the title of this video, I spelled the word warning kind of funny, and that's because I really get a kick out of the videos on YouTube that are like, warning, do this now. And it's really funny, but you know what? I should have made that the title and thumbnail of this video. Anyway, this is going to be actually a kind of warning video, but at the same time, I don't want to be your dad. I want you to be able to make your own decisions. So first of all, I'm going to talk about some things that I really like about ARK, and there's a lot. They're really cool. But there are some things I feel like I should probably caution you about as well. There are some red flags that I want to raise. The last thing I want is for a new investor to get burnt trying to chase past performance and hype. But at the same time, there's a lot of smarter people than me on the internet and in the investment world. So just remember that these are just my thoughts and opinions on this matter. And at the end of the day, you've got to do your own research and make your own opinions, but hopefully I can provide a little bit of insight to help you do that. Speaking of hype, listen to this. The main ARK ETF, the ARK Innovation Fund, officially took the crown from JP Morgan as the largest actively traded ETF on the market. Now that is incredible. And that is what I call hype. I mean, remember just a short year ago when ARK was a company that barely anybody heard about, and now they have the most money invested in an active ETF. That's crazy. I mean, look at this data here. This chart shows the top ETFs which had the largest inflows of money throughout the year. So we see VTI, which is Vanguard's total stock market ETF, in the #1 spot. And this makes sense because VTI is in so many investment portfolios. But look down the list a little bit and you can see in the 14th spot, that's ARK's Innovation ETF. Like, holy crap, they're only a few spots away from GLD, which is the main gold ETF. So much money has flowed into ARK this year. And look at this next one. This shows the growth of a firm's assets under management, or essentially the amount of money that's invested in this particular fund. You can see that ARK completely blows away the competition here at over a 1000% increase in growth in AUM. Clearly something is appealing to investors here. So first, let's talk about what's really cool about ARK. The very first thing that I thought was really interesting about what they do is what they call their open research ecosystem. And essentially what that means is there's kind of 3 interconnected categories that they essentially do their research in. So there's traditional sources that most investment firms would use for research. And then they have social media, and then they have crowdsourced information, and they kind of blend these all together to come up with their own way that they do research. This is really cool because most investment firms these days use 1, maybe 2 of these methods. There's not a ton of them that are like really heavy into social media, and especially not crowdsourcing information. So it's really cool to see a firm being a little bit more innovative in this way. ARK is extremely open. They publish a ton of their own research, white papers, articles, webinars, podcasts, you name it. They are very active in putting their views out there. And the really cool thing they do is they basically say, hey, here's the research we've done on this particular topic. Do you guys want to take a look at it and kind of add your 2 cents in? Are we missing anything? Is there any holes you can poke in this? And essentially what that does is it allows the correct information to kind of percolate up to the top, because when you have all these people participating in social media or other avenues, you're bound to find somebody who's an expert in the field to come along and say, hey, maybe you guys should have considered this as well. And then they can go, oh, wow, thanks for introducing that to this part of the conversation. We can add this to our research. Like, it's a win-win for everybody. They advance the conversation, but they also get people to essentially fact check what they're doing and make sure that they don't have any blind spots. Let me give you an example to kind of illustrate how this might work. Let's say I wanted to buy a new toothbrush. So to find what the best toothbrush could be, I could go maybe to my dentist and say, hey, dentist, what's the best toothbrush for me? But that's only one person's opinion. It's an informed opinion, but it's still only one dentist's opinion. So usually what I like to do when I'm looking up product recommendations and things like that is I go onto Google and I type in on Reddit something like best toothbrush Reddit, and then that'll pull up a whole bunch of different Reddit results. And the way Reddit works is there's an upvoting system. So when somebody asks a question and then people respond to that question, these answers get upvotes based on basically who agrees with it. So the top answer has the most upvotes, and therefore the most amount of people agree with that answer. So in theory, that should probably be the best toothbrush because most people say they like that one. This is kind of sort of what ARK's doing in their own way with their research. They're allowing people to get involved in this way. And I don't know of too many other investment firms that are doing this. To my knowledge, most keep a lot of their research and stuff like this very private. They don't share stuff like this because they're very protective of it. I mean, if you've heard of any others, feel free to let me know in the comments. Heck, I mean, ARK even makes a huge effort to make their trades as public as possible. There's even this website that somebody created called Kathy's ARK, where you can see their trades basically happen in almost real time, and you can also see trends in their holdings and stuff like that. All this detailed information about ARK's portfolio, how they're managing and trading it. It's really cool. On top of that, they clearly have a pretty good pulse on the future trends that are going to be shaping our world. They're a very forward-looking firm where a lot of investment firms, especially older ones, can be a little bit more backwards looking. Now, as a hockey player, I know that a good hockey player skates to where the puck is going to be, not where the puck already is. And I believe that ARK is definitely showing some good signs and proof that they are doing just this. Kathy and her team have clearly identified some major areas for technological revolutions through their thematic investing approach. But here's the thing. Thematic investing is pretty tricky to pull off, and I'll talk more about that later, but first I want to show you some of the bigger problems. So here's the chart I showed you at the beginning of the video. Now, this is a chart of a fund called CGM Focus Fund. Sound familiar? Probably not. But at one point in time, this fund was the hottest investment you could actually make. CGM Focus was started by a man named Ken Hebner, and at one point there was an article written about him that was called "Legendary Fund Manager Goes from Penthouse to Outhouse," and that's because at one point he was a legend. But then things didn't turn out so well in the end. CGM was the best performing mutual fund from 2000 to 2009, and it averaged a gain of 18% per year. And remember, this was at a time when it was called the lost decade for investing, and that's because the S&P 500 over this time period actually averaged a loss of about 1% per year. So the fact that he was able to gain that much money per year on average is super impressive. And so investors piled in. I mean, as you can see on the chart, as the fund performed better and better, the fund eventually reached $8 billion worth of assets under management at the peak. But then what happens? See that? The fund loses 50% of its value and investors pull a ton of money out. They leave the fund, leaving it with less than half of what it had at the peak in terms of assets under management. The story of CGM is important for a few reasons. First of all, investors tend to chase past performance and pile into funds at their peak. And two, investors tend to underperform the actual investment fund that they hold. Let me explain. ARK's had a tremendous run in performance recently, right? Well, let's take a look at their volume. Usually it was somewhere around 250 million, and then boom, huge spike up to 1.4 billion. And look at their assets under management as well. It's completely gone parabolic. It's because investors are chasing this past performance that the fund just experienced, hoping that it's going to continue this trend. But the fact of the matter is, this isn't a new thing. Investors always do this. They did it with Jerry Tsai's famous fund in the 60s. They did it with Peter Lynch's famous fund in the 80s. They did it with the tech funds in the late 90s, and then Ken's CGM Focus Fund in the 2000s, and they did it again with the mainstay Market Field Fund around 2014. And chasing this past performance usually leads to investors actually experiencing a worse return than the fund actually earns. So even if ARKG or the main innovation fund experiences an excellent return, a lot of the investors won't actually experience that same return. And here's why. Because investors are piling in after a period of great performance, they usually buy in at that peak. So that's when they bought in. And then the fund might go on to essentially lag in performance. And then a lot of investors, what they do is they decide to sell out of the fund because it's not performing as well as it once was. So they effectively buy at the very peak and then they sell at the very low, thus earning a really poor return on their investment, even though the fund stats show that it's doing excellent. Investors just simply aren't buying and holding the fund. They're buying it at the wrong times. And I also want to quickly touch on why thematic investing is really, really tricky to pull off. There's 3 reasons. Number 1, the macro trend that someone is predicting must play out as expected. Number 2, companies in the portfolio must actually end up benefiting significantly from that trend. And number 3, current stock prices don't already reflect the impact of this expected growth. So here's the thing. There's a lot of talk, especially right now, about ARKG, right? About the genomics being the next biggest investment. And so I want you to ask yourself, like, think to yourself right now, if you're sitting there thinking that, yeah, you know, genomics are the next biggest investment. I'm so sure of it. If you're really sure of that, if you have that really confident conviction, chances are, you know, pretty much everyone else does as well. And if you look on any investment message boards, if you look on YouTube, that's what everybody's saying, genomics, genomics, genomics. So this would mean that valuations are going to be pushed up to really high levels, which they are. So look, like I said at the beginning of the video, my personal opinion of ARK is really positive. Everybody involved on that team is way, like, completely out of league, like way smarter than me, and they've done some really cool things. I really like their approach, and they deserve this, you know, this success and the performance that they've had right now. It's great to see. And also, I'm not saying that genomics is not a good investment. That's not at all what I'm saying. The insight that I'm basically trying to provide is basically saying maybe check yourself before you invest in a fund like this and think about the reasons why you want to invest in this fund. Are you just chasing this past performance and you don't really even have a good understanding of what ARK actually does, what they invest in, what these companies actually do? Are you just chasing those numbers? Because for new investors especially, I want you to know that this is not the first time this type of fund has come around. There's been so many more like this in the past, and I've showed you how investors tend to behave around them. So I just want you to be aware of these kind of cognitive biases that might be cropping up for you. So essentially, my key piece of advice that I would leave you with is, if you do want to invest in a fund like ARK, that you be extremely confident in this decision, and you're prepared to hold it for the long term. You're prepared to hold it through the volatility that's probably going to come with an investment approach like this. If you're just going to chase the highs and dump the lows, don't do it. You're probably going to lose money. Only buy an investment if you're actually in it for the investment itself. Don't buy a stock or anything else just for the price action on a computer screen. And so with all that said, that's going to be it for me today, guys. Don't forget to grab your 4 free stocks with Webull, linked in the description down below. Thank you all so much for watching, and I will see you again soon.